afternoon, everyone. Thank you for sticking around. I know it's the last but one panel, but I promise to keep it interesting. It's an absolute privilege to have this opportunity to moderate such distinguished speakers at Singapore FinTech Festival. I'm Kavita Menon, Director of Singapore Sustainable Finance Association. We are a newly established industry body set up by MAS along with the financial sector to really promote sustainable finance in Singapore. And on the panel here today, I have with me Calliope Chiotti. She's a Chief Environmental, Social and Governance Officer at Temenos. We have Janet Johnstone, who is the International Chief Administrative Officer at BNY. We have Helge Muenkel, who needs no introduction. He's a Chief Sustainability Officer at DBS. And we have Dalad, Tantiprasongchai, I got it right, Chief Operating Officer and Chief International Officer at SCBX. So thank you, everyone, for being here, and a warm welcome to everyone. I just want to remind for the audience, please do use the pigeonhole to put in your questions for the speakers. Before we get started, I want to set the context for today's discussion. So Asia is expected to contribute around 2/3 of global growth in 2024, but the drivers of this growth is changing. The region is transitioning into a new economic model that is actually becoming more sustainable as well as technology-driven. Banks, which are the capital providers of the economy, are at the forefront of this transition. So this panel will explore how banks are embedding sustainability into their strategy and also leveraging on data and technology to drive this transformation. So to support this discussion, we have a panel of industry leaders who are really charting these new paradigms for banking in Asia. So with that, let me kick off. So my first question is to Calliope. So how is Temenos really helping your financial institution clients to embed and integrate sustainability into their strategy and operations? And what have been some of the key learnings along this journey?
Thank you, Kavita. Great question. I would like to say a big thank you to you for having me on the panel and listening to the IT vendor technology, perspective here. And I would like to also say that I'm really happy to see that the Singapore FinTech Festival is so forward-looking and has, ESG as one of the leading topics today and the next few days. Now, going back to your question, Temenos is a leading banking platform provider. So our mission is to help banks and financial institutions to become smart and sustainable organizations. So how do we help them? We help them digitally transform. So using our technology, we help them go to the next level. We'll help them address the needs of all the stakeholders, and at the same time, we do that in a sustainable way. So you would say that we're not here to sell any ESG solutions. What we're doing is like our mainstream business, which is technology, and by digitally transforming the right way, you can achieve sustainability at the end of the day. What we see talking to our clients, we are a company which serves clients, big and small clients in 150 countries. So that means that we listen to our clients and we see what they're looking for. And what we see is that sustainability is one of the top 10 areas on their agendas. I'm not saying that the challenges that you mentioned, I'm not saying that the maturity is the same along all countries. Legislation and regulation is different. The maturity level, the ESG maturity level is different. But what we are saying in this case is that using technology and using technology the right way, efficient, modern technology in a cloud-based infrastructure can actually help you decarbonize at the end of the day. So you're doing your mainstream business, but at the end of the day, you get the benefits of decarbonization. You get the benefits of getting all the data you need in order to be able to keep up with the climate stress tests and with your ESG reporting at the end of the day. And since, and I'm going to wrap up here, and since our clients are banks and financial institutions, highly regulated industry, At the end of the day, it's not something that it just happens. We provide the data. So our clients can actually get the data from using our product. So we invest a lot on our technology, and we assess it every year to see the decarbonization potential that it has. I'll tell you more, in the process. So.
No, thank you for that. And it's really about fundamentally changing how banking operations and technology is kind of set up. And that kind of it's a good segue to Janet. For you, you're a global financial services company. You've been around for 240 years. How does this kind of fit into that mandate, and how has that journey been?
Yeah, delighted to answer that, Kavita, and thank you very much for inviting me to sit on this esteemed panel. So look, I'm going to attach to the fact that we are the oldest bank in the United States, and as you said, for 240 years we have been serving clients, we've been co-innovating with them, we've been developing products with them, and all that while we have navigated wars, famines, natural disasters, financial crises, etc. So as an organization which we call a GSIFI, or a Global Strategically Important Financial Institution, the extent to which we are able to sustain ourselves through our resiliency is really core to our operating model. So bring climate change into that equation, and what I would say is we have the tools and the capability that we've exercised over the last 240 years to think about climate change in a very similar way as we think about resiliency relative to our core operations. As we think about resiliency and sustainability, there are really two aspects. Number one is what is on us to control. So what is our responsibility and obligation within our own organization to remain resilient and sustainable? So within that space, we are very diligent in terms of understanding our business services framework, what services are critical to the functioning of the financial services sector, and making sure that we have resiliency and sustainability in our people, our processes, our systems, and our vendors. When it comes to our own sustainability objectives, we have set ourselves targets on scope 1 and 2 emissions goals aligned to a 2-degree scenario. Some years back, we've met those, and through meeting those, we have gained the confidence to reset those targets to 1.5-degree emissions pathways for scope 1 and 2 emissions. So we continue to evolve our own approach to sustainability. The role that BNY plays in the financial services industry is really critical to the movement and the management of financial assets. And indeed, we do that for roughly 20% of the world's financial assets. So in that capacity, we have been very focused in the last couple of years in developing platforms and products to support our clients, to manage sustainable assets, to support their green bonds, and to provide portfolio investment capability for those that wish to invest in green products. Let me stop there, Kavita. More to come.
Thank you, Janet. And so I like the way that you talk about resilience and how this is sort of integrated within that. Helge, before I ask my question to you, in my past life, I used to be a global financials analyst. And the question that I used to get from most European banks that come to Singapore is, how does DBS do it? Being the first bank in the world to translate your fintech investments into actual P&L sort of implications for it, you're a clear leader in terms of under trendsetter here. Where is DBS on this journey today? And how are you integrating sustainability into it?
Yeah, sure. So good afternoon, everyone. By the way, I first would like to say this is the most comfortable couch I've ever had on a stage. It's almost, if you lean back, I could almost get a bit too comfortable. So, no, thanks, Kavita, for this, and great stuff to be here. So let me maybe touch upon a radical transformation that we have indeed embarked on. And there are two lenses. There's tech and data, but there's also the way of working. Let me describe that, and then I link it to sustainability. So on tech and data, we actually started very early. It was in 2014 There was a natural language program by IBM called Watson, and we started experimenting with AI. Didn't work that well, and it took many, many rounds of experimentation to actually get to the next stage. But we have come a very, very long way since then, underpinned by a few principles. One is purpose. So when it comes to data and tech, there are always ethical questions that need to be addressed, especially with Gen AI. So we have a framework which we call pure, purposeful, unsurprising, respectful, explainable, that we really use to address ethical questions and the purpose. Second, we have been radical in digitizing everything and really using data and a data-driven operating model in anything that we do. So we have created a huge data lake, a very robust data architecture, and also a library, for example, of AI and Gen AI models, which we call Alan, named after Alan Turing, the inventor of modern computing, which we really use to design this architecture. Number three, you need people. So even if you have purpose, even if you have a great data architecture and fantastic data lakes, you still need people. We have around 40,000 plus colleagues. 1 in 4 is a data scientist or software engineer. So there are more people running around with hoodies and sneakers than with suits. And this amazing talent base allows us to be quite radical. So a lot of stuff we've done on data and tech, but there's more. The way of working has been radically transformed. In simple terms, traditionally, organizations organize themselves vertically. There's a front office function, a finance function, a risk function, operations function, product design. It's radical. We are now organizing ourselves horizontally across what we call customer journeys, managing through journeys. Insanely complex. But it always starts with what is the customer experience, the customer journey that we want to create. And it's radical because all of a sudden you have all critical people on one table across a horizontal line, which means, for example, tech people have the same voice as the front office person or product designer or whatever. And together they perform, we call them performance cells, they're addressing this horizontal journey. It's a radical different way. Now, both data tech and way of working are interlinked because you can't do horizontal organizations if you don't have a lot of data and radical, really data-driven operating model. Now, leaning this into sustainability is very critically important. Like already today, well, I have a DBS GPT Copilot, like most others at DBS. I've been using it for 6 months. My life is different now. So now I can read 300 pages in 2 minutes. Obviously not reading the entire document anymore, but we have brought it into the firewall. You can actually access the internal data lake as well. At the moment, we use it mainly for productivity gains. Who has not looked for an old email or a file and you can't find it and you get frustrated? So there are loads of productivity gains, but we're going to use it to really reimagine the way we interact with customers. Already today, we use Gen AI for ESG risk assessments. So if a relationship manager puts something into the approval chain and says, I want to give a loan to company X, there's one seamless process, one seamless IT system. You get to ESG, you need to fill in a fairly comprehensive ESG risk questionnaire. RM can say, I upload docs, Gen AI, please fill in the ESG risk questionnaire. So we taught Gen AI how we do that. So it's already there now, and next steps are going to follow. And the horizontal organization, same thing. We're integrating sustainability either as a lever or as an outcome into these horizontal journeys such that people that think about new customer journeys integrate sustainability into everything they do as opposed to it's an afterthought or that. So it's quite comprehensive and we're integrating sustainability really into everything that we do.
No, thank you so much, Helge. So like bank or like tech, I think that's still up for debate. But like from micro, I want to zoom out a bit, like when we go into Dalad. I mean, SCBX, it is the oldest and the largest, financial group in Thailand. And so your journey is largely underpinned by how Thailand is sort of evolving as well. So what is the role that you play within that ecosystem?
Thank you, Kavita. Happy to talk through this. And first of all, likewise, privileged to be sharing the panel with my fellow panelists. And so just coming back to, Kavita, your question, right? I think it's very interesting listening to my fellow panelists from both the financial player perspective. I think we are the oldest financial institution group in Thailand. We're coming up to about 120 years, so we're half your age. but I think what's different is that I heard keywords from Helge around operating model design. I heard keywords around the intersection across tech, Gen AI, and how we think about not just bank digital transformation, but digital transformation together in parallel with climate transition. And of course, all these thematic considerations are also at play for us. But our role is slightly different when about 2.5 years ago, we made a structural decision to set up SCBX as a group holding company. We actually put Siam Commercial Bank, which is our legacy 100-plus-year-old financial institution, under this financial group. Part of that underlying thesis is also thinking through the next S-curves, the macro global themes that are really converging for us as a financial player in the country. And of course, climate domain was identified as one of our 3 strategic pillars. Now, of course, when we thought about the operating model, there is that internal sustainability aspect, which we recognize as being a critical, important for us and accountable area that we have to play in. But there is a whole climate domain as a business, as a value creator, that we also identified as a next wave of growth that we should address and we should have an active role in. So it's really converging the role of us as financial player in really committing our efforts and our processes and our accountabilities towards our corporate and retail customers along that net zero and climate transition journey, but also, how we think about climate as an orchestrator, being the largest and oldest financial group. So that brings me to, I guess, more pointedly your question, how does that work, right, in a country? Thailand is the second largest digital economy in Southeast Asia and ASEAN. We are lagging slightly behind in the kind of data center investments comparatively to Singapore, Malaysia, but our government and public policies have also identified this to be something that the government wants to really push full steam ahead on as we look at real sectors declining. We co-authored an internal study with McKinsey to help the government think about what is the green growth master plan going to look like for a country like Thailand? What is the role that Thailand could play for the region and for the country in elevating itself as a regional hub, elevating itself as a, kind of first mover or accelerator in that building that green ecosystem, and therefore what can we do as a financial group, right? So that is kind of how we think about our contributions to the nation, to the region, and bringing to bear some of our core competitive advantages, but also navigating the regulatory aspects and transitions that is very dynamic as we look through where climate transition is really evolving.
Thank you, and really sort of takes me to that next sort of segment, and having a look at the time as well in terms of that public and private engagement, and where you brought in regulations as well. And Kalliopi, you referred to it earlier when you're talking about the maturity in the different markets in terms of where regulations are. I mean, could you actually walk us through what are you seeing in in the 50 over markets that you have operations in?
I would say that the biggest drivers for ESG is regulation and reporting, reputational risk, competition, customers and employees, and last but not least, cost and efficiency. So regulation is a big tsunami happening in many different countries. In Europe, there's the CSRD regulation that is coming, TCFD, too many acronyms that somebody needs to report, and too much need for data and disclosure. Greenprint mentioned it before. No harmonization yet, we're getting there. So banks, we see it from our customers, need to be able to have data in place in order to be able to keep up with all the reporting requirements. Number 2, reputational risk. We've seen what happened to those who decide not to act or to those who decide to act in the wrong way. Competition, customers and employees, and a very important driver. Right now, younger generations, they want ethical and sustainable banking. They're asking for services from the bank that did not exist before. They don't pay, they don't have the traditional bank account. So they want different, ways of payment. They want to know what is the impact of, their transactions, of their, what they buy on a daily basis. We've seen another example with employees. For example, we are an IT software company, and we are in the war for talent in Asia, and it's brutal. And we noticed at some point that we had to compete with very big, technology companies. And we understood at a point that, we could not provide them with the fancy, cars and the fancy benefits. But what was interesting and why developers were coming to our companies, because they would see that they would work on green APIs, they would work on projects that have a purpose at the end of the day. So it makes a big difference. If you ask me, my generation would go for the car, would go for the benefits, not for the purpose in the job. Competition, if you need to do it, because if you don't do it, if you're last to do it, the competition, will outsmart you. And last but not least, and for us, it's a very important aspect, cost and efficiency. Cost and efficiency because climate change translates into financial risk. Financial risk translates into money at the end of the day. So carbon is money. So the more you can save on carbon, the more you can save on dollars at the end of the day. And this is something that is very important to a lot of us. You might be starting because you're forced to do it because of regulation, but then at the end of the day, the benefits are going to be measured in carbon efficiency, and as we have, the title of our panel, in sense of, of dollars.
Absolutely. Thank you, Calliope. And I like where you're going with, the price of carbon itself. And Janet, I don't envy your job, where you have to kind of look at it across 6 continents in 35 countries. So how do you use technology to kind of help you with that?
Yeah, so look, let me focus on 2 things. We're a very client-oriented we call ourselves client-obsessed organization. And as you heard me reference earlier, we are all about innovation and continuing to grow and improve and be more for our clients. So the way that we're using technology in both those spheres is, I'm going to give you just 2 examples of each, right? From a client perspective, we use a lot of technology to really get into figuring out what the real client need is before we embark on a product innovation journey. And we use technology, surveying, face-to-face interaction, co-innovation in our innovation centers here in Singapore, London, and New York. We also have something which we call our cyber technology visualization board, which we have in our innovation centers, which we use to demonstrate to ourselves, but also to our clients, the health of applications that are operating in the 38 countries where we operate at any one point in time, and they flash bright red when something is not quite right. So coming back to my point earlier about sustainability and resiliency is really key to our operating model. The CTOC, as we commonly call it, is a really key part of our client engagement to demonstrate our resilience and our sustainability while we're using that operationally within our own organization. Similar to my colleagues on my left and my right, we have also democratized AI in our organization to the extent that many of our colleagues are now able to build their own AI agents to improve their decision-making, their insight into data, which therefore then helps us to understand client need and product innovation. So let me stop there. I know we're tight against time.
No, thank you. And so client first. And so that sort of makes my job very easy in terms of asking the next question to Helge, where we kind of when banks come up with these transition plans, ultimately it depends and it's underpinned by what the real economy corporates actually manages to do. So what are the opportunities and challenges that you're facing as you're translating some of these into action with your corporate clients?
Yeah, absolutely. Let's maybe first reconfirm that sustainability is not only about climate. I know we're very focused on transition and transition finance to tackle the climate crisis, and that's correct. But we have 17 United Nations Sustainability Development Goals that cut across economic, social, and environmental matters, and we must not forget that, also because they're interconnected, which is, by the way, one of the biggest challenges in itself. Indeed, so the climate crisis is insanely challenging. So observation number one is we can't do it alone. So we're also dependent on the entire ecosystem to move. What does it mean? We have governments and regulators, we have private sector entities, finance, and we have the community at large. And everybody is accountable, but everybody is also dependent on the other. So if only one of the four moves, we're not going to get anywhere. So one challenge, for example, is policy and technology uncertainty. If we want to unleash capital to finance CapEx that is earmarked for new technologies, everybody kind of wants to know what's the direction of travel. So policy and technology certainty is quite critical. Then in Asia Pacific, I would go as far as saying we don't even have a lack of capital. It's very often the risk-reward profiles of the projects. If you ask a US pension fund, would you invest in renewable energy in Laos, they would fall off their chair and would not be able to do it for all sorts of reasons. So risk-reward is a really tricky challenge. We need to tackle that, again, as an ecosystem. Talents, capacity. We need a lot of people. I drive an EV. It was down the other day. We went to a garage and the mechanic said, "Where's the motor?" I said, "Well, unfortunately, no motor, but the battery is on the other side." So we need engineers, we need mechanics, we need financiers and everybody to actually build capabilities. We need human beings, despite all the tech and data frenzy, still human beings to do it. So that's another challenge. And I come back to the 17 UN SDGs, the interconnectedness of issues. And we must create an Asian narrative and an Asian pathway to a net zero future, taking into account our socioeconomic situation. That is not to say that we have to slow down. That's not what I'm saying. But we have to do it in a manner that actually works for us. Yeah, there is amazing topics, like we're now very focused on financing the early and managed phase out of thermal coal power plants. It's the mother of all just transitions. You know, can the kids still go to school if the parents lose their job? Will the communities still have access to electricity? So there are many, many dimensions. So in a nutshell, I would say challenges are abundant, but I would also claim we actually have most of the solutions. There are very few, if any, hard-to-abate sectors left. I could think of very few. Most of them, we actually know how to do it. So now it's the willpower, getting the ecosystem together and really do it.
I think you did the job of like what I was planning to summarize, but thank you, Helge, like in kind of building that on to what Dalad has to say. I mean, when we're talking about like, finance for like these climate projects, like, Helge touched on it, like how are you sort of like, managing that, like, with the Thailand context, and how are you sort of leveraging your existing technology investments into unlocking climate finance there?
Yeah, so I resonate with a lot of Helge just said. I think, I think life is about risk management, and professional life and commercial decisions is really all about balancing risk. And at the core of our DNA as a financier, it's also, this prudent kind of risk management DNA that's at heart. So when we think about, how we play and how can we really contribute at scale and positively to the nation's or the region's climate development or green ecosystems development, we really think about how we can incentivize all the relevant players along various value chains, supply chains, to help them think about how if we all come together in a joint mission, whether that be under the mobility or EV sector, or if we're thinking about food or energy security, or we're thinking about CCUs, we're thinking about alternative renewables, etc. You really need to align the interests across the different key actors, and at the heart of it, it does go back to what is the kind of biggest risk concerns and what would be the rewards indicators, and how do we orchestrate that as the role that we play actually as quite a neutral player, being a financial player, to bring it all together, right? So therefore, the role of financing projects in climate transitions become about really thinking about how do we build our internal capabilities to identify, prioritize projects, how do we really kind of build that into our risk model, because traditional banks and most banks, as we heard, are still unclear about how to assess the risk of these really high cost, high capex, large projects. And a lot of climate projects are very heavy infrastructure with a really long time horizon, right? So how do we solve for that? How do we bring liquidity to the market in the roles that we play? I think that's what we can do, as financial institutions, yeah.
And really bringing in that almost that ecosystem of investors at different capital stacks and different risk appetite. So I know that that screen is flashing up, and I want to kind of pick the common thread between everything that's been shared today. And I kind of see it in 4 C's. So first is commitment, national level sort of commitment to the decarbonization agenda. You need certainty in policy. We definitely need capacity, not just at the individual level, institutional capacity to be built up. We need capital at scale from private sector to be mobilized for this decarbonization and the broader sustainable agenda that Helge highlighted. And finally, nobody can do it alone. We definitely need collaboration and an ecosystem of players really coming together to drive this effort. So I think we finished on time. So thank you, everyone. And thank you to the speakers for your sharing today. Please put your hands together for the speakers.